I just wanted to make a quick post on how I use the risk range product and what I use to visualize it every morning. Okay, so every US trading day, Keith will publish his risk ranges, and if you haven't seen that before, I'm using an old date here. Just obviously it's a paid product, so I don't want to share today's data. So if you haven't seen it before, there's bonds at the top, US indexes, group of ETFs depending on what quad we're in, then foreign indexes, the VIX, currencies, commodities, the FANGs, Tesla and Bitcoin. As we go through different quads and different periods, these will change normally. Rates, indexes normally stay the same, but the ETFs will change depending on what quad we're in. Okay, so let's just take, for instance, the SPY. So obviously remember this was for December 22nd. So it tells us whether we're bullish or bearish, and nice and easy, color coded in green. So what does it get? What data does it give us? It gives us the previous day's close. Okay, and depending on whether it's bullish or bearish, we have a lower bound and an upper bound. Okay, and that will tell you, the lower, if we're bullish, the lower will be a buy trade, and the higher will be a sell some trade. Okay, that's important, some, as Keith keeps saying. And then if we're bearish, it's not quite the same, but if we're bearish on something, the higher bound will be short, and the lower bound, as the price goes lower, the way we expect it to go, bearish, as the price goes lower, it will be sell some or reduce your short. Okay, so how I like to do it is I like to do things visually. That's just the way I kind of am, and this is great, but I like to see the numbers. Okay, so for me, I focus just me. I focus a lot on the dollar, gold, and oil. That's just my thing. I like to watch. That's how I'm learning. Although Keith keeps saying, look at everything all the time, I am still trying to learn. So I'm focusing on those three, which kind of gives me a gold deflation, oil inflation. That's how I'm kind of looking at it, and I'm trying to focus on them ones just while I'm learning and adding. And then once I'm comfortable with those, I'll start adding in extra things to trade. So these are all the previous risk ranges, for instance, for gold. And in yellow is the daily price. And then I add in this sort of center line, which makes it look very much like a Bollinger Band. But as Keith keeps saying, from the minute he clicks the button to send these, from the minute they open, or if it's an overnight like SPY minis or whatever futures, literally from the minute he presses go on a range, it's constantly changing because the price is changing and the volatility of the price is changing. So these are constantly moving. These are constantly moving depending on the volatility. So they're not targets, they're not support and resistance levels. Okay. Take, for instance, here this big huge move in gold that we had at the start of January. From the minute he clicked and posted the risk range, the price went way above what was the posted risk range. But because obviously the volatility had changed, this risk range had moved. It's just that the risk range that you got in the morning was static. But if you're able to look at the volatility and measure the volatility, okay, so the risk range has moved. It's not a static target. It's constantly moving, just as the price is moving. Okay, but this is obviously just based on the previous close price that we get here. But this is for gold. Okay, so this is how I like to visualize it. So in order to do that, I plug all the risk ranges, ETF Pro, blah, 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 everything into here, okay? So let's simplify it just to make it easier, okay? So I've picked XLF just as an example here, okay? Now I'm just going to show you how I visualize the risk ranges on a chart and how I use it daily. I may make another video how I calculate these things and how I get prices into Google Finance and whatever else, into Google Sheets. I may do that later, but that's not what this is for now, okay? So we've picked XLF. I have the current price now. I have my lower range, my upper range, and whether we're bullish or bearish, okay? And from these two prices, I can calculate this, which is that center point, what it would make it look like a Bollinger Band, okay? I like to use that as another point, another decision point to make, okay? So this is Tradingview. This is just, it's free, it's easy, it's okay. There's plenty of stuff on here, there's plenty of stuff not, but it's something that most people, if you're starting to learn, have access to and have used in the past or seen other people making Tradingview charts, okay? So I'm on XLF here, okay? So I have a lower and upper range and we're bullish, okay? So if I come down here onto this measuring chart here, I want a long position, okay? Because we're bullish, a long position. And if I just stick this anywhere and make it a bit larger, okay? So this red line here, that's the closing price from last night. And this is the pre-open price. So this could move as we head into the open. We've still got a few hours yet for the US Open for me here. Okay, so I just stick this center line here on, if it's now either the current price or just like now using the pre-market price, okay? So green is the trade going into profit, and red is the trade going into a loss, into a drawdown, okay? So I put that center point on for here, the pre-market price. Now if I double click on here, so this is the current price where we are, pre-market. Depending on whether it's bullish or bearish, okay, these levels will be different, okay? But this is a bullish chart, a bullish, this is a bullish trade. So this one will be the upper bound, which over here, we've got 3202, okay? And the lower, 2992. Okay, so we have the upper range and the lower range. So currently we're roughly somewhere in the middle, okay? But what I like to add is this center line. Okay, and again, you can see how to calculate it if you want to. You can pause the video and do whatever you want. But I like to have this center point. So on Tradingview, we can show that here. Gives us all trend lines and stuff like that if you're into technical analysis and drawing wiggly lines and whatnot. Okay, so 3097. Okay. So that gives us a center point. If I quickly change this to 3097, which is our trade point, our center point, you can see here it's got a ratio risk reward of 1 to 1. So the risk reward is 1 to 1 of it going up or down. Okay, if we change it back to our pre-market price, okay, so on the pre-market price here, you can see the ratio has changed. Now when we talk about, you know, making decisions at the top and the bottom of risk ranges, okay, if I change this now down, you know, near the bottom, let's make it $30, very close to the bottom end of the range. You can see here our risk reward is 25 to 1 upside. Okay, so if we execute a trade here at the low end of the range and the price gets to the upper range, that's a 25 to 1 trade, because we have a very small very small loss and a large gain. Okay, now again, that doesn't mean the trade is going to be right. That's just the possible outcome of a trade if you make it at the low end of the range. Now, the opposite is true. If we go to the top end of the range, let's say we did take the trade, and now the current price is all the way up here at close to 32. You can see here that the risk reward is tiny. You've got a tiny bit of upside and a lot of downside. Okay, I just wanted to show you that's how I set it up, just to visualize. If you look down here, I have it set up for everything: dollar, sterling, oil, US 10-year. Okay, I have it set up for all the things that I watch on a daily basis. Okay. So now that we have this center line, it allows us to make some extra decisions. Okay. The best outcomes are at the edges of the range. Okay, so the best outcome for a bullish trade is to execute right at the edge of the risk range, at the lower end of the risk range. That will give you the highest risk reward. Okay, but there's nothing stopping you. For instance, you can see it in the queue. If you're part of the macro show, you can see people's questions. Pick something, Bitcoin. Will it ever come down? Will it ever get to the low end of the range? Okay. Now, there's nothing stopping you from, 30, 40, let's go. No, there's nothing stopping you from buying, 10 basis points, 20 basis points, whatever. There's nothing stopping you adding a small buy here. Okay. It's a decision-making process. We now know that if it's here at the center point of the range, the risk reward is 1-to-1. So you've got less upside or downside, depending on whether it's a bullish or a bearish trade. So it's just the same here. There's nothing stopping you making a small buy, adding to a small position here. Okay. And then if the price goes down again, there's nothing stopping you to add another, 10 basis points, 20 basis points, okay? And again, the price goes down. The price goes down. Add another 10, 20 basis points, whatever you've decided you want to do, okay? But as Keith says many times when he's trying to explain it, the largest possible outcome and the highest probability of the price to reverse, either up or down, is highest at the edges of the range. Okay, so all this does, for me, adding this center line, it just gives you just one extra bit of data in order to make a decision of what you want to do. Okay, the ranges are there for a reason. The price has a higher probability of changing direction at either edge of the risk range. So that's where you get the largest payout. If you wait for the price to come to the low end of the risk range, and again, daily, these risk ranges are moving, so the risk range might come to the price. But it just allows you to make a decision, okay? I'm not at the low end of the range, but I'm, halfway between the center line and the bottom. Maybe I'm going to add 10 basis points to my position. And just the same when you're up here, okay? You've executed well, you bought at the low end of the range, well done. The price has moved up, okay, I'm now at the center line. The probability is now 1-to-1, okay, so maybe I take 10 basis points off. As you move up, okay, maybe I take another 10 basis points, maybe I take another 10 basis points, because the price may get to the top end of the range. Maybe want to take even more off, and then as it's coming down, if we're in a bullish formation, as we've said, the price may never get down here, or it may take longer than you expect to get down here. So maybe when the price pulls back to the center line, we're bullish, so it's going to spend more time in this side than that side. So maybe when it comes down to the center line, you then start adding. 10 basis points, 10 basis points, 10 basis points. Okay, price reversed. Okay, this just helps me make a decision on what I want to do. Sometimes I want to do nothing. Sometimes I want to just leave it and wait. Other times, okay, but that's for me because I'm sitting watching the screens all day. That's what I'm doing, okay? So I can look, if I add something here and the price immediately reverses, then I can do something about it, okay? But obviously if you are just getting the risk ranges, you quickly set some orders. Maybe you go through, right, get the risk ranges and then just set some buy orders for the bottom end of the range on whatever broker you're using, and that's it. That's all you do. Just, okay, XLF, bottom end of the range is, I'm going to set a buy at $30 and then just leave it. That's it. Go and do your day job, go and do whatever you want. Okay, but this is just how I view it, how I get the data, how I add this one little extra piece which allows me to make decisions a bit better. That's just for me, but so that's how I use the risk ranges daily and how I visualize it. My small little brain just likes to see it visually on a chart. Okay, so hopefully that's helpful. If it's not, if it's too simple, if I've gone too far or gone too quickly over something that you want me to go over again, then just tweet me or put a comment. Just let me know. Okay, so cheers, thanks, bye.